Hey, what's going on, everybody? Here, welcome back to another episode of Crypto Nation Reacts. Here we have the Altcoin Daily. I like to do reaction videos on their channel a couple of times a week, and I believe this will be my first one for this year, 2024. And the title is called "They Are Lying to You About the Bitcoin ETFs." Crypto Crash Explained. See, like I said, I already knew what happened. This was clearly a bear trap. The way it dipped early this morning. It then bounced. This was clearly a bear trap. So this was basically they were trying to trick retail out of their plays, have retail panic sell, and then go ahead and price them out, and then they quickly go ahead and buy up Bitcoin and crypto, and then retail is waiting for it to dip further, but it's not, and then they get priced out. This was definitely a bear trap. And what I did was, I did exactly what they did. I did what the big money did, the big players that's trying to get the ETFs. I went ahead and bought more crypto because this is exactly what they did. They definitely bought this dip, and this was an orchestrated market manipulation. And right last night when I made the video early this morning before I went to sleep, I think it was about an hour later. I was asleep at the time. I woke up. I think I woke up around 9:40. About 8:45, I woke up, and I saw that the market took a nice dip. I'll just call it like a flash crash. And I was like, wow, I just talked about this. They're going to manipulate the market, try to get retail to dump their crypto so they can go ahead and pick it up. Leading up to the spot Bitcoin ETF. I saw it coming, man, from a mile away. I saw it coming. I'm glad I didn't fall for it. I saw it coming. But hey, if there's retail who sold, hey, like I said, I'm not a financial advisor, but I saw this coming. And what I did exactly what the big money did, and they bought the dip, and that's exactly what I did. And I want to make a separate video about that and how I played this out. Anyways, here we go to this episode.
Puking, as I like to say.
The Bitcoin price pulled back today.
Totally erasing some of those gains so far.
Dipping 9% and virtually erasing yesterday's gains.
Prices tumbling by the most on an intraday basis since back in March.
And with a major reason for the dip being the massive amount of liquidations that just happened.
Now, this is, of course, ahead of the SEC's January 10th deadline to decide on a spot Bitcoin ETF.
Will the spot Bitcoin ETF approvals be a sell the news event?
Anticipation of that upcoming event might be part of this. We could be seen heading into that day, maybe buy the rumor, sell the news event as we get closer.
So what triggered this liquidation was a report from Matrixport, a financial services company that put out an article saying they expect the SEC to reject all ETF applications this month. The Bitcoin price dumped 9% in 1 hour on the basis of this report. And their justification? Number one, politics, being 5 of the voting SEC commissioners are Democrats. And 2, justification, applicants like BlackRock still haven't satisfied the SEC's requirements. Now, this is understood to be just one analyst's opinion, and yes, it has been largely debunked, his reasoning. Good note from Alex earlier this morning on the Matrixport note. Several of their supporting arguments are nonsensical. Number one, being cherry-picked information.
One simple but brilliant trick to heat your home in 90 seconds and save thousands of dollars on your heating bill this winter. This genius way
That the bull run was kicked off by Franklin Templeton's September ETF filing. No mention of the fact that Invesco, WisdomTree, VanEck, Fidelity, and ARK had already filed, and all have more ETF assets under management than Franklin Templeton. Number 2 point of the report to take issue with, that all ETF applications still lack a critical requirement. Here, they are apparently referring to the fact that the issuers all have surveillance sharing agreements with Coinbase, but Coinbase is only 11% of the spot market. Which, even if true, it's irrelevant because apparently they missed the DC Circuit Court of Appeals ruling, which negated this question with the reasoning surveilling futures markets was sufficient because futures and spot prices were mathematically indistinguishable. Other commodity ETFs also surveilled the futures, and the same 24 hours that all this was happening. Update. both BlackRock and JP Morgan are instructing staff to be prepared for a spot Bitcoin ETF approval imminently. The source at JP Morgan directly said, instructions have been to make sure the rails, Cash Create, are properly prepared for a quick turnaround. Also, timeline-wise, the SEC has lined this up. Reminder, the SEC back in November delayed the Franklin Hashtag applications a full 24 business days before their second deadline. The only rationale for such a move was to align comment periods for potential simultaneous approval. So assuming this gets approved, will we see a sell the news event?
As a trader, my gut always tells me if things go higher, I get a little bit scared, right? So I do think a lot of the speculative fever around the ETF is probably reaching a crescendo this week. So yeah, could we get a sell-off? Sure. But I think that would be a sell-off, a dip to buy. Because remember, there are still a lot of people that have not been able to buy Bitcoin for their portfolio. So even a 1 to 2 to even 5% allocation in IRAs or from private wealth managers, they're going to be buying the ETF over the year.
Now, 8 different countries globally.
Exactly. That's what I'm saying. This is a bear trap. This was basically a dip. The load up. Basically, what they're doing is, I'll look at it like this. They're basically gave us more time to even load up more on our bags, on our crypto bags. So I definitely loaded up a little bit more on my bags on this dip, and I'm glad I did. But the people who sold their whatever, sold off on their portfolios or whatever for fiat, oh my goodness, you guys are going to be punching yourselves in the air, when it comes to, retail.
Already offer spot Bitcoin ETF products today, led by Canada.
In Canada, we have a spot Bitcoin ETF. One of the reasons why people think that this is going to be a sell the news event is because the flows with that ETF haven't been as anticipated. And I think that that's one of the biggest narratives, that we've seen this huge price run up going into this event.
But if there was any doubt that these were not getting approved in the next week, breaking. Fidelity just filed a registration of securities for its spot Bitcoin ETF. Form 8A is a registration statement used by companies to register securities with the SEC. For a pending ETF approval, filing this form can be a significant step. It shows that this train isn't stopping, it's going faster.
Yeah, I think everybody's a little bit too worried about what happens in the next week or in the next month. Really what this is JP Morgan's of the world, the BlackRocks of the world, giving kind of a light of approval for Bitcoin as an institutional asset. And the ETF approval really opens the door for these passive flows to come from institutions, right? Where this has mainly been a retail asset for a long time. There's the recognition that on a risk-adjusted basis, this is the superior asset, right? Everybody talks about the volatility. What are they missing is the fact that passive allocation on a long time frame puts Bitcoin head and heels above every other asset class. If you started dollar cost averaging the day Bitcoin hit its all-time high until today, you're up 67% in Bitcoin compared to 23% on the NASDAQ, 11% for gold, and you're negative on bonds, right? So that's what people are missing here. This is a much bigger story than just the ETF, and it's more so BlackRock's and the JP Morgans of the world capitulating.
And breaking, Goldman Sachs is now in talks to join JP Morgan and be an authorized participant for BlackRock and Grayscale Bitcoin ETFs, starting to think that this recent dump was a big stop hunt before approval, meaning flushing the liquidation out of the system was actually healthy for the market. So I do personally think that there will be a bit of a sell the news event upon approval, just like when we saw with gold ETF approval for the first time ever back in 2004. It was a run up into the approval in price, and the sell-off, of course, what it meant for the space for gold was overwhelming, and the price really only went up for the next 5 years. Now, for those of you who ask me, which different crypto categories are primed for a positive 2024? DPIN.
What if you could use retirement accounts to invest in crypto? With iTrust Capital, you can. iTrust Capital allows you to invest in your favorite crypto assets 24/7 with the tax benefit.
Is a big one.
Remember the term, because it's the next big thing in Web3.
It stands for Decentralized Physical Infrastructure Networks. which are blockchain protocols that build, maintain, and operate infrastructure in the physical world in an open, decentralized manner.
Peak is a layer 1 for Deepin.
Now, many of you have been asking me about Peak. They're a channel partner. They're one of the world's fastest growing Deepin ecosystems. We see the actual numbers.
Deepins are physical infrastructure networks. You can think of charging stations or 5G hotspots, which communities crowdsource together and then provide connectivity or energy through those networks. And instead of big corporates earning all that money and generating all that value, the community who builds that infrastructure earns and owns the infrastructure.
Now, the news today is this. We're thrilled to welcome Bosch, the world's largest sensor manufacturer, to Deepin, a giant step towards peak-ready Deepin hardware. So obviously this sector of crypto is going to be huge.
Deepins are estimated to be a total of 3.5 trillion by 2028 alone. That's a massive market opportunity.
So I will keep you updated on different up-and-coming trends in crypto like this. And even though Bitcoin's dipping today, MicroStrategy co-founder Michael Saylor is selling almost $216 million worth of his own shares to buy more Bitcoin.
I was granted a stock option in 2014 with respect to 400,000 shares, which is going to expire next April if I don't exercise it by then. For almost a decade now, at my request, the company has only paid me a $1 salary, and I've chosen not to be eligible for any cash bonuses. Exercising this option will allow me to address some financial obligations as well as to acquire additional Bitcoin for my personal account. Under my trading plan, I plan to exercise and sell 5,000 shares on each trading day, beginning on January 2nd, 2024, and ending on April 25th, subject to a minimum price condition. This means the sale will take place over almost 4 months. If you'd like more details about the plan, I would refer you to the 10Q. I continue to be optimistic about MicroStrategy's prospects and should note that my equity stake in the company after these sales will remain very significant.
That is the video. My name's Austin. Like always, see you tomorrow.
Michael Saylor. But anyways, there we have it. Crypto Nation Reacts.
Meet Kiana, Shiori, and Karthik. Just a few merchants from around the globe who have switched to Shopify, the leading e-commerce platform.
Okay. There we have it for Crypto Nation Reacts. Everybody, thanks for tuning in. Like I said, don't forget to subscribe and hit the like button. It's totally free here. It's totally free. So yeah, I will see you guys in the next video. And take it easy. All right now.